This is the Lulich Corner. I'm Jordan Lulich with Lulich Attorneys, and today we've got the opportunity to sit down with Kevin Lambert with Lambert Commercial Realty. Kevin, I appreciate you joining us this morning, and thanks for coming here and sitting down with us.
Yeah, absolutely. Yeah, thank you, Jordan. Looking forward to talking today.
So it's always nice to, rather than diving right into, business and talking about your profession, it's always nice to get to know people who come on the show, especially for our audience. So one of the questions I've got that's kind of off the cuff, that's not a business question, is you've been a local here for a while, right? Mm-hmm. Born and raised.
Yep.
And so what's your go-to restaurant? Like where do you go? What do you eat?
Yeah, so my wife and I do like going out to eat every once in a while, but I actually have gotten really into takeout.
Okay.
And we live kind of south of Vero, and there's some really good spots around us. I mean, I'm definitely part of that trendy hibachi takeout trend that everybody's clinging to. So Ume Grill is a really good one. That's off 60, Oniku. But a lot of the places downtown, I mean, just the personality and character of a lot of places downtown, and of course the food and atmosphere makes it a lot of fun.
Yeah, awesome. Okay. Any top weekend activity that you and your wife do? I mean, how would you spend your pastime when you're not working?
Yeah, we like kind of going. We do a lot of stuff in town. I mean, we'll go to do of course, go to the beach. We do a lot of stuff with our family and some different friends, whether it's game nights or just going golfing or going to the park, mostly in the winter outside of summer.
It's a little cool outside.
Yeah. But a lot of stuff centers around the water, and we've always been really into that. So
yeah. So Kevin's, you're a commercial real estate agent. You've been doing this for 7 years, 8 years?
Got my license late 2014 and have been full time since about then. Yeah, so about 8 years.
About 8-9 years. So what's going on? I mean, you've seen over the last 8-9 years, you've seen a lot with the real estate market, and commercial tends to be a little different from residential. So what's the current state of the commercial real estate market right now in the U.S.?
Yeah, so I'd say U.S. We're seeing, of course, still kind of seeing how the long-term effects of COVID are taking root. I mean, you can go online and see office market still isn't doing very well, but looking at our little Indian River County, we still see segments of that. It's very different than what we see in big cities. So, for example, the office market, I would say it's weaker in comparison to industrial, which is just blowing up throughout Florida, doing really, really well. They're still underdeveloping based on the demand that small business and manufacturing jobs have in Florida. They're still underdeveloping. So I think that market in particular we're going to see remain strong.
That's supply and demand. Is that what you're saying? Because because they're underdeveloping, there's only so many office spaces that are available, and so there's still a demand, or even would you say there's a larger demand here locally for commercial real estate over the last few years?
Fundamentally, it is all just driven by supply and demand, yes. I'd say the demand for commercial real estate has mostly driven by everyone moving here, which is obvious, but more specifically, we've had a lot more retirees plant in Vero Beach as opposed to just kind of be transient. I mean, a lot more of them are staying here for longer periods of time, and they like having assets that they can see, feel, and touch. They're getting into commercial real estate. They're looking for things to invest in, and our market's been a really sweet spot for that. So what that has done is it has drove the price on investment real estate up quite a bit. We're still a lot less than what we see in the larger markets, Miami, Orlando, things like that. But if you look at our cap rates, which is basically the ratio of the net income, the return you get from the property to the purchase price, the cap rates are still really, really low and surprisingly low for how small our market is. So I think a lot of that is driven by the percentage of wealth that we have here. They're basically valuing having a property close to them that they can control, as opposed to buying something up in Jacksonville when they live here. So
you're saying it's lower cap rate, but the convenience of having their property is the justification for that, for investors investing in the local commercial real estate market. So why would you say Indian River County is a good market to buy in then?
Long term, I think anywhere in Florida, you're going to do very well just because of the influx of population. I would say, though, I've been in real estate just long enough to kind of see slow times, and then what we had in 2022, which was really crazy.
Yeah.
Indian River County, I'd say, is a pretty difficult market to invest in. I personally am investing in our market. I live here. I understand the market really well, but it's definitely a tough market to find deals, especially in today's day and age with everything else that's going on.
So you think it's a good market to invest in because it's a tough market to find deals in, or?
I'd say it's a very strong market with good growth potential.
Good growth potential.
I think if you're looking at it purely from a return on your dollar standpoint, it's just very competitive. I mean, someone like me who doesn't have $10 million in the bank is competing against guys that do.
Right.
And they're willing to take a lower return because they're not having to finance a deal, which drives prices upward.
So are you seeing that instead of like investors focusing more on the actual rate of return, their cap rate, like you were talking about before, it's more of a long game where they're focusing more on the appreciation of the building and taking that into account as far as the healthiness and the potential that Indian River County has?
I'd say both factors are definitely at play, but I think after COVID, we had a lot more international investors as well, and some of them were, and there's always talk about the stability of the dollar, and real estate is historically a very good hedge against factors like inflation, and even, that includes the ebb and flow of the dollar itself. So there's been people putting money into real estate using the physical asset, almost like a bank. So if you're concerned with your money losing value to inflation in the bank, you can put it in real estate. That's going to go up and down with whatever inflation's doing.
That's true. And over time, real estate always goes up. It doesn't, it might go down temporarily. We haven't seen that prices go down too much locally, but, overall, real estate continues to go upward, whereas inflation will always be present. And the $1, back in 2005 is worth a lot less than it is today. Or today it's worth a lot less than it was back in 2005. So what about for people wanting to get involved in commercial real estate? Let's say we've got, a business owner or just someone who has some extra cash. They're wanting to take that first step. They're wanting to become a real estate investor in commercial real estate. What do they do? Like what steps do they take?
Yeah, so I think one of the most important things is getting plugged into the folks here locally. Like the local banks are crucial. Obviously, getting plugged in with the local attorneys and the local administrators that are able to inform you on what's happened historically and what's being planned for our county. I think that's really, really important because that will help an investor understand the timing a little bit better and where they're getting into relative to what the market's actually doing. I think a key is to be patient and to wait for the right deal. Back in 2017, 2018, when I was relatively new in the business, looking back, it's like, man, I didn't have money to spend back then, but there were so many deals. In hindsight, 2020, but
right.
Now I have a much better understanding, and I think knowing what things cost to replace relative to what pricing is at any given point in time gives you a pretty good metric on whether or not something is a good deal. So, you're able to pick up a medical building for $100 a foot, for example. In today's dollars, it's going to be well over $300 a foot. Oftentimes, plus the cost of the land, plus the 2+ years it takes to build. So, fundamentally, without looking at all the other factors, that seems like a pretty good deal. Whereas, today, the margin has leveled off significantly. So today it's actually kind of a healthy sign in some ways that pricing is much more in line with what it costs to actually build things today.
So one of the things that I hear on my end is from people I just talked to, network with, is they're going to wait until prices come down, right? They're going to wait. They're holding on to their money. They want to wait They want to wait for that deal, right? Until that time period, like you mentioned, the 2017 to 2018, where you could find deals left, right, straight ahead. There was deals all over the place. So a common pattern that I'm seeing is people are saying, well, I'm holding on to my money. I want to wait for their deals to resurface. So is now a good time to buy, or is the better strategy to wait until we're in a time period like the 2017, like the 2018, where the deals were more easy to find,
right,
and just all over the place?
Right. Yeah, I mean, there's a lot of similarities between the real estate market and the stock market. And the saying in the stock market is you want to buy when there's blood in the streets. And in general, the same is very true in commercial real estate. There's more low-hanging fruit when the economy's depressed, but there's not as many indicators that we're going to enter into that time period again. I mean, you look back in 2002 to 2005, it was pretty inexpensive to build things, and prices were going through the roof. For example, you could build a shell of an office condo, not even a slab poured, so just basically the four walls and the roof, and you could sell something like that for $200 a foot in close to downtown Vero Beach. Today, there's literally one on the market in the Bridgewater Condo Association right now, gorgeous office for $200 a square foot.
Yeah.
And the inflation of 20 years too has been a part of it. So
it's interesting because, I mean, a year ago, people were saying we're entering into this recession. We saw a couple quarters with a negative GDP. And as times continue, I mean, the Feds continue to raise interest rates, which I'm sure is a challenge for business owners trying to obtain financing to purchase a commercial unit. But the onslaught of this recession that the news was highlighting, and what the economists were saying, we're not quite seeing. We haven't seen a negative GDP for quarter over quarter for the last few quarters, and we're not seeing so much from the real estate side those red flags for a recession, for that blood on the street. Like you said, it was like the prime time to buy. So, I mean, what are your thoughts as far as people saying that they're going to hold out because a recession's imminent? I mean, do you think that we're going to see a recession, or do you think that the real estate market will see an adjustment of prices like we did in 2008, 2009? Because everybody's got that last correction in mind of 2008, 2009, where prices came down, 30, 40, 50%. And people they're going back to what I hear is they're waiting for those prices to come down.
Right. Yeah. And that sounds great, but I hear from my financial advisor all the time, trying to time the market, especially for people that are a lot younger and have time for the appreciation in real estate. Because when you're buying an investment property, it's not just the return from that investment, it's also the intrinsic value of it that will appreciate over time.
That's what we're talking about before.
Especially as the economy grows. So I think it's much more dependent on the individual investor. If you're trying to flip property, now's a really tough time to do it. Yeah. If you're trying to plant your roots in the market, I would say it's always a good time to do it, because the long-term trend will be growth. And again, you're looking at what things cost to build today. I don't see those costs going down anytime soon. Some of the building materials may ebb and flow some, but I don't see them.
Small adjustment.
Yeah, I don't see them tanking.
Yeah.
And because the cost of construction is so much higher relative to what it was in the early 2000s, I don't see pricing tanking. I don't see signs indicating that.
So what do you think the biggest challenges that small business currently face in this economic time period that we're in, this climate that we're in? I mean, we talked a little bit about interest rates, and those interest rates being high and that affecting, if you've got a high debt service, then you've got a lower cap rate, right? So what are some other, challenges that you think small business owners face?
Yeah, small business owners, I feel like the climate is a lot more difficult. I actually spend a lot more of my time working with small businesses than I do working with investors. Commercial real estate is not just a bunch of, rich people trying to maximize their dollar. I mean, there's a lot of, small business is really the bread and butter of our economy and of any local economy. And Interest rates obviously affect everybody. What I see a lot of small businesses getting hit by too, whether they're renting or buying, insurance costs have been a big factor in Florida in particular.
And I heard they're going to continue to, I mean, we've seen some legislation passed, which they're saying that the premiums for insurances are going to go down, but we might see another hike. I was talking with an investor a couple of weeks ago, and he said, you know, my commercial building, my insurance premium was $30,000 a year, and it went to $105,000.
Yeah. Yep.
Like that probably destroyed his earnings, you know, his income that he had on the building. So that's a huge challenge. Yeah.
It's huge. And people may hear examples like that and be like, oh, who cares? It's an investor. He can handle it. But the reality is a lot of the leases, that's a pass-through. So the tenant, the small business that's a part of that building, if their insurance goes from $1 a square foot to we're seeing $2, $2.50 a square foot, that's passed straight through to the small business, and it's affecting their bottom line. And ultimately, they're going to have to raise prices or become more competitive in order to offset that expense. So,
are you seeing rents increase because of these higher costs for taxes and insurance and repairs and different construction items from 2-3 years ago? I mean, are you still seeing them increase this year as we're kind of getting into a more normal post-COVID era?
So we saw rents go up quite a bit, especially in industrial rents probably doubled in the past 5 years.
Wow.
A lot of the like office, medical, those rents have gone up in the past 3 years significantly, but not so much. So for example, something I was renting, there was a lot of medical space, I'd say Class B, Class C medical space that would rent for the upper teens, let's say $18 a square foot, and something like that today will probably be closer to 22 to 24.
Okay.
So they have come up.
But a healthy amount, it sounds like.
A healthy amount, but will they keep climbing? We haven't seen rates go up because of insurance because it's on the, it's a cost element. So it's costing them more. At the end of the day, just like a home buyer, they only have so much per month that they can allocate to rent or to a mortgage. And the same thing is true with a small business. So what we saw in the 2017, that era, at least what I saw, companies have to get more creative to protect their bottom line. Yeah. And so they're either going to have to take smaller space, they're going to have to go in less desirable areas, or sacrifice things. A company that may want 16-foot ceilings may have to have 12-foot ceilings for an industrial user and just have to make what's available work. Because coupled with that, inventory is still pretty low. Right. So options are a lot smaller as well.
Going back to that supply and demand. So when someone does venture out and they're like, all right, I need help. I want to lease a commercial unit, or I want to sell a unit, or I want to purchase a unit. Why reach out to you? Like what value can you add to someone who's venturing into a sale, a purchase, or a lease as a commercial real estate agent versus just a regular agent, but more in general, just finding an agent rather than doing it themselves?
Right. Yeah. So in the technology age, anyone that is computer savvy to any degree, it can go online and see what's on, LoopNet, right. Crexy, a lot of the big platforms. So I think that as a commercial agent specifically, the value really comes in is the information that we know. I mean, we transact, by far the most commercial deals in the county, and having the experience of going through hundreds of transactions as opposed to these businesses that may go through 5 over the course of their life. Right. I think that market knowledge is really where the value is. Knowing who to connect them with in a transaction.
Who to stay away from.
Yeah, well, sometimes, that's true. But ultimately, the knowledge that we have is able to save them money and help them understand whether or not they have a good deal. I mean, we're able to show them, look, this is what's taken place in the past. This is kind of what we see going forward. Here's roughly where you need to be. Yeah.
So it's that market experience rather than just looking online and seeing what those values are.
Right.
Or what they're listed for. Because people can list for a piece of property all they want, but is it actually going to sell? You know,
our market's not very big. It's
Yeah.
not very difficult, especially to see what's listed. Anybody can do that.
Yeah.
It's finding the properties off market, and again, having the connections and experience is really what's important.
Yeah. So Kevin, how can people contact you if they want to reach out to you? What's your contact information?
Yeah. So my cell phone is always the best way to contact me, which is 772-532-1165. Our website is just lambertcommercial.com.
All right. And we had Kevin Lambert, Lambert Commercial Realty on today. Kevin, thanks so much for coming on. And this is the Lulich Corner, and we'll see you next time.